Hello and welcome to today's NinjaTrader Ecosystem webinar event with Alan Fitterman of DMIC 2059. My name is Thomas and I'm a platform representative here at NinjaTrader. Today's webinar is interactive, so if you'd like to ask questions during the presentation, please open the chat window. You can open the chat window by moving your mouse to the bottom of the Zoom window and pressing on the chat icon. Now, once you do have that chat window enabled, I would like to test for audio and video. So if you can hear my voice and see the projection on your screen, please enter the letter Y into that chat window now. All right, well, it looks like coming in loud and clear. Now, we have a very special event for you today with Alan of DMIC 2059. But before we get started, I would like to place a poll into that room. Now, while you fill that poll out, I would like to mention that it's important to understand that there's substantial risk in trading commodity futures contracts and Forex. You should carefully consider whether such trading is suitable for you, and it will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker and could even incur losses beyond these amounts. Please inquire at the link provided for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation or recommendation, but simply educational in nature. Now, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage team at the information provided. Now, thank you everyone for filling out that poll. That poll asked what initially brought you to the NinjaTrader ecosystem site. 33% of you said searching for trading apps and add-ons. 61% said looking for trading education. 0% said looking for programming assistance. And 6% said joining my first live webinar. Well, welcome to everyone today for joining your first live webinar. Now, the NinjaTrader ecosystem website is home to hundreds of third-party apps and services, all centered around the NinjaTrader platform. With new tools added nearly every day, NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools or services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and on-demand video archive to view event recordings. I'll post the link to that information below. Now, for more up-to-date information, be sure to like or follow the NinjaTrader ecosystem on social media. And NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure you are on the latest version of the NinjaTrader platform and to pick up a free live data trial, please visit the link I'll be posting in the room. And to purchase or lease the platform, you could visit our purchase page at the link I'll be posting in the room. And if you were just getting started with the NinjaTrader platform, we offer free live trading events on a daily basis. You could view a schedule of our weekly webinars at the training webinar or at the training link I'll be posting in the room. Now, we are very excited today to bring this unique event in which which Alan will discuss how exclusive signals and indicators can help beginner and advanced traders alike move to new level and a more even playing field with corporate computers in the intraday financial index future space. Now, thank you for your attendance today. And without further ado, it's my pleasure to welcome to the NinjaTrader website, Alan. Please take it away, Alan. And Alan, it looks like your mic is muted. So if you press the unmute mic or the microphone icon at the very bottom, you should be able to unmute your microphone. And just a second here, folks, it looks like we are having some technical difficulties with getting the microphone situation. So just give us a second here.
Okay, I think we're unmuted.
Yep, you're coming in great.
Okay, and we're going to share the screen. And hopefully that's okay. Is everything okay now?
It's looking great on my end.
All right. So, I've lost the slide again. All right, I'm just going to go with what I've got here. And sorry, folks, for trying to get lined up. We're going to look today at the proprietary logic and structure for E-mini intraday chaos theory. We're going to try to find we're going to show you how we find the last high and last low of the intraday market. We're going to show graphic multi-dimensional time momentum and price momentum indicators. Add in the next step to market profile, VWAP, value area, Taylor, and Mandelbrot. The early recognition of trend days, doji days, volatile days. We'll show you how we find that early recognition and the logic to work them. The E-mini intraday financial index, the ES, NQ, and RTY is the specialty for our instant AI intelligence. We welcome beginners, intermediate, and advanced. At the end of the webinar, we'll give you the 30% off code to apply to the initial membership. Let's define chaos logic. Dynamic systems whose apparently random states of disorder and irregularities are actually governed by underlying patterns and deterministic laws that are sensitive to initial conditions. To reach logic and structure in the futures market, we need to recognize self-similarity, fractals, and self-organization. Small differences in initial conditions can yield diverging outcomes for dynamic chaotic behavior, as for example in many natural systems, including heartbeat irregularities, weather, and climate systems. The intraday futures markets have artificial components that need a multi-dimensional approach to understand the fractals within each day. Where do fractals start and end? Where are key reversals likely? And how do we recognize time momentum and price momentum as the day unfolds? Volatility in contemporary intraday market makes it essential structure and logic is built in. Each new morning, a fresh structure and logic is analyzed, allowing us to fit key time and prices to the new day. By recognizing the intraday chaos pattern, we can project time momentum and price momentum. Multidimensional checks and balances are built into the software and used as the day progresses. Older standard measures are set aside. They are not a good match for corporate computer systems. We replace these standard measures with proprietary indicators graphically visible in one place. Let's look at DIMC 2059 charts and examine the intraday laser built into each new day. All of the following charts are from the last 4 months and will integrate the points mentioned, showing examples of varying intraday structure and logic setups. Real-time research was necessary to take volatility into account in the S&P 500, NASDAQ, and Russell 2000 futures. Real-time research charts go back about 15 years. This is an overview of our proprietary structure and logic. Graphic chart lines and panel indicators are a purpose-built structure for each new day. DIMC shows the panel analysis over here with the panel time and price lines reproduced on the chart. The panel has 5 key headings. DIMC shows 4 coded lines. The red lines are referred to as R1 or rectangle 1. These lines are analyzed by the software and a market preference is printed. On this chart, we see preferred down. Also under DIMC is the magenta DYC line. The relevance of the DYC is its relationship to the 3 red lines. Under ranges, measures are made between the distance of each red line and the total range of all red lines. Range signals key information, for example, duplicates. On this chart, under ranges, we see MNIO duplicate, we see MNIO duplicate and break C1 versus Island watches for key magenta line signals. The panel information under the headings Dimmock and Ranges is the structure and logic guide for the day. The scaffold for each new intraday market around which the intraday market will move and gravitate. Under 5 minutes, we show the open, high, low of our time team bars when these are orange bars that appear at various times on the chart. There are also gray bars, and we will explain the difference. The first orange bar, high and low, over here, is plotted with tan lines, and this proprietary indicator is a critical measure through the day. You'll notice that we can't plot that critical tan line until we get the first orange time team bar. Under Dimmock up and down, this projects the R1 breakup prices in green and the breakdown prices in red. These key panel price lines are reflected on the chart. The 3 red lines are labeled R number 1, or in the blue rectangle, or rectangle number 1. The magenta code line is obvious, and there is additional information custom fit to each new intraday market. The yellow lines, YH and YL, are the prior intraday high and low. The key time team signals stand out again as orange and gray bars. The first 30-minute and 60-minute high and low is shown, and reverse signals are printed on the chart in real time. These are HOD, high of Dimmock day, reverse down, or LOD, low of Dimmock day, reverse up. Added on the left of the chart, labeled red Y, is the prior day rectangle 1 high and low. There is a tendency for the market to check back to the prior day intraday rectangle 1. M in black is the key high and low rectangle 1 of the week. The green line, labeled W, shows the prior week high and low. On this intraday ES chart, you see under the Dimmock panel again, preferred down, MNIO duplicate, break C1. Analytical logic is indicating a break below C1 today, the low price of rectangle 1. The first HOD signal up here attempted to sell down. It fell 4 ES points, but could not at this point get lower than the high of rectangle 1. So this shows the validity of rectangle 1. We're eager to buy in this setup. We are not eager to buy in this setup and continue waiting for the next sell signal. At the next orange team signal, we get a second HOD, high of Dimmock day, reverse sell signal. This HOD reverse down signal matches the M side bar high over here of the key rectangle 1 of the week. Waiting for the breaker C1, we use the scaffold and structure to project the steps down and pre-place sell orders. You might place a pre-placed sell order when the market goes below the yellow line of yesterday's high. You might place a sell stop below the R1 high, the 2 red line duplicate. As we mentioned, a very important duplicate called out in ranges. And you can place a sell stop or waiting for the market to get below R rectangle 1 using the Dimmock up, down red sell prices. The close below R1, below the C1 line, is the key breakdown in the intraday market. Note that we projected this about 3 hours earlier. Once below the R1 low, the market fell about 20 ES points in 10 minutes. From the M high and the HOD sell signal up here, The ES fell about 40 points in 15 minutes. The steps down were clear on the chart. We obviously can't always get all of those points. The next intraday DYC line is close to the L2 panel price breakdown. There we see the L2 panel price breakdown. And we have a new DYC line, and a sell below the new DYC line has a good risk reward prospect. The intraday market quickly fell another 30 ES points from the L2 sell entry. Note the sell-off ended at the next time team gray bar, which was close to the red Y prior intraday low, and the key yellow line, the prior day low. So we can see how this was fairly easy to see. We caught the high of the day and the key sell-off times and prices, and later the low of the day. We used Dimmock logic, context, structure, and scaffolding in an easy and graphic multi-dimensional format to watch and track intraday market movement. Let's move on to more charts, pointers, and details in some different intraday setups. This is the same intraday chart with the VWAP or market profile added. VWAP or value weighted average price line is green, and the VWAP is indicating a buy preference. We are not keen to buy. We are watching for the projected sell-off based on the preferred down break C1 indicators on the panel. The orange time team HOD sell signal recognized the time and price momentum reverse. Software analysis is coalescing with real-time indicators. The market fell, capturing the last high of day. The structure, scaffold, and logic provided the easy-to-see multi-dimensional keys. This is the NQ chart on the same day. It has a different construction and therefore different logic signals. The Dimmock panel is calling C1 mid AAA SR, AAA support and resistance. The C1 code line is between the other two red lines. We watch for AAA support and resistance to be met prior to the market being free to move with the checks and balances of the time teams against the R1 scaffold. The NQ panel is showing a different construction to the ES chart. Under MNIO ranges, the call is neutral 1 to 3 waves inside R1. And combined with a C1 mid up here, the projection is a choppy period with waves inside R1. This is all laid out in the manuals and quite easy to understand once you work through it. The chart shows that inside R1, there were at least 3 waves. 1 wave, 2 waves, 3 waves, actually 4 waves. Applying the Dimmock on all financial charts, we can see when the markets fall into sync. This is our proprietary cross-market check. The ES gave an HOD sell signal projecting the sell-off, and NQ gave an HOD sell signal at the same time. The NQ completed its projected 1 to 3 waves inside R1 prior to selling off. The markets fell into sync with 2 cross-market sell signals at the same time. NQ fell about 200 points below R1 low, and additionally about 150 points below the L2 price, matched by time and price individual cross-market signals, again, when we got a new DYC line. The manual lays out the logic for each new intraday structure and scaffold. Let's concentrate on time team signals on this chart. We see the first orange bar, HOD signal, meaning high of Dimmock day, a sell reverse down is called for, it's a projection. The market falls until it hits the first LOD signal, meaning low of Dimmock day, buy reverse up. The market rallies until it hits the next HOD signal, sell reverse down. The market falls until it hits the next gray bar LOD signal, buy reverse up. There were additional signals confirming these movements explained in the manuals, but keeping it simple, the basic efficacy of the search for finding the high and low of the day during each intraday market confirms we are on track in finding the internal rhythm and context of each new day. DMIC is incorporating key theories. Mandelbrot's chaos fractal theory, released in the 1960s, confirming pattern reproductions in nature. Mandelbrot went on to examine the markets and found a similar perspective, finding that the smaller the usable window, the more accurate the pattern is likely to be. Also incorporated is Taylor's 1954 three-day book theory, with necessary adjustments for contemporary markets, which is why each new day is closely watched for a projected sell day where market closes very close to the low of the day, or a buy day where the market closes very close to the high of the day. The objective is to catch these setups early in the day. The value area market profile logic is incorporated into DMIC, and we shall look at that again later. General wave theory is replaced by our more exacting intraday wave theory of the Dimmock and range analysis of rectangle 1. The daily matrix island combination wave theory scaffold stands from the initial structure through to the close of the day. One Sunday, while a little discouraged, I read of Archimedes' theory of combinatorics. Archimedes provided about 44 pieces and required the formation of as many squares as possible. Over 17,000 combinations could be used to form squares. The key to this caught my eye. 6 partner pieces had to be included. This confirmed the theory of a smaller key inside a bigger picture. The NQ Dimmock classic up signal under DMIC is seen here. This is rectangle 1. The first green arrow shows a fast rally which closes above 3 key lines. Very easy to see. This is a 3-line break, including the magenta line, the rally above rectangle 1 high, and the L1 breakup price, and above the M sidebar. This Dimmock structure is projected to find a high of the current day within the first 30 to 40 minutes of the Dimmock opening. The next buy possibility is when the market has slid to retest R1 high with magenta line support. We look at this as a buy opportunity. This, in fact, became the last low of the day. So one key is to use Dimmock code lines both as attacking and defensive price points. We're actually going to buy here. We believe strongly there'll be a bounce. This use of the Dimmock code lines as attacking and defensive price points enables the use of smaller stop loss points and aggressive positions at the key logic and structure of DMIC lines and also time teams. It's best to avoid chasing the market. Better to let the market come to you using DMIC structure, scaffold, and logic. NASDAQ rallied above the Y high yellow line, the prior day high, and the next time team signal, the gray bar, sends another buy signal. An hour later, the market hit the orange bar HOD sell signal. The NQ market fell about 40 points. On this EMC chart of the same day, the ES Dimmock panel prefer up is contextually a stronger upside signal than NQ. ES rallies above 4 lines, including R1 high and the magenta line, again easily visible. Closing above the magenta line and rectangle 1 high is a key upside signal. This projects the market will rally into the PM session. The first step is the projection of a high 30 to 40 minutes after the open of the DMIC rectangle 1. We see the context of each day's market like an intraday GS position of the market. We see here at this green bar that we're expecting more rally progress. Today, the price is above the sidebar Y and the prior day R1 high and sidebar M, the R1 low of the prior week. The first orange bar has two lines attached, the tan high and tan low, which stands out all day. This is a proprietary signal. The close above the tan high projects continuation of the rally. The market rallied up off the retest of the tan high until the last gray bar of the day gave the HOD sell signal. Late PM signals can whipsaw. On this chart, two consecutive HOD sell signals within 30 minutes of each other project sell and are best not ignored. ES market fell 20 points at the gray bar higher day. A sudden turnaround clearly indicated. Note the market did not fall below the tan low. Moving to the Russell 2000 RTY chart, Dimmock makes no commitment today. Ranges are at a neutral indicator with 1 to 3 waves showing. The red arrow shows the break below the magenta line, a key break. We note the FOMC, Federal Open Market Committee, end of day key prices on our charts, and we see the market fell below 2 key FOMC prices at the same time, plus the sidebars M low and green W last week's high. Next, so this is a very clear sell signal at this point in time. But we had an orange time team bar open and close above R1 low, indicating a break below R1 low was not currently probable. In the PM session, we got the first close below R1 low, which incorporated a close between the yellow line Y low, the prior day low, plus the new DYC indicator, plus that tan low indicator, another 3-line break. Timing is key at this point. This is a key time momentum period. A breakout from rectangle 1 during this time momentum period is projected to be significant. The market fell below the new DYC plus rectangle 1 low plus yesterday's low and fell about 13 points in 20 minutes. We had clear defensible lines. We did not see chaos, but a strong possibility the market was about to sell off with a good cost-benefit ratio. Good defense is an essential part of trading, as well as recognizing the time and price to trade. We call this trade time, when the elements of the day have fallen in place. Time momentum and defensive lines were clear. On this NQ chart, let me see if I need to go to the next chart. Yeah, on this NQ chart, I need to point out that available Dimmock information turns on at 9:30 a.m. This chart shows the market has opened below the prior day low and fallen below the Y low, the prior day rectangle 1 low, and the market failed to close below M low, the key rectangle 1 watch of the last 7 days. To understand the balance of the day from 10:30 a.m. to the close at 4:15 p.m., we need to input the movement of the first hour as the final piece for an up-to-minute analysis of the intraday market. The DIMIC panel and charts engaged with this latest information. Today, DIMIC panel gave a classic down signal at 10:30, and after testing up and rebuff at the magenta line, the NQ broke down past the level 1 breakdown price and fell about 50 points. The second orange signal here, below R1 low, signaled that a retest of R1 low would be a good place to sell using the defensive line available of the R1 low. NQ reversed down off the R1 rectangle 1 low. The new magenta line instantly printed below rectangle 1 low, projecting and supporting the sell-off. The first close today below the tan low of the first orange time team bar was confirmed by this gray bar signal, again explained in the manual, and the NQ fell from the PM test of R1 low about 200 NQ points. Traders can use DIMIC as they choose, to scalp or hold back waiting for larger rewards, or do both by using more than one contract when comfortable. The next chart shows a classic down indicator. The VWAP market profile you can see here. The VWAP ends the day at the R1 low price. This was the key price of the day. And as you know, hopefully by now, you realize that this was the low of rectangle 1, and the VWAP confirmed this was the key price of the day. The 4 red arrows highlight the time and price trades of the DIMIC manual. A retest of rectangle 1 low was a sell opportunity after the orange team was below the low of the scaffold. Time and price coalesced to project sell. We match structure and to key times of the day to match a time momentum sell in the same direction of the DIMIC logic of classic down. Trade time is in sync when the parts are pointing in one direction. Time momentum and defensible lines are present. NQ fell about 100 points from the R1 low. And now let's move on to a key structure, which our research has covered, finding the last high of the day about 5 hours before the intraday market closes. This is a Russell 2000 chart, and the same structure you will also find on the ES and NQ futures charts. In the panel under DIMIC, we see classic down. Under ranges, neutral Brahma. The first wave down is noted by these 3 blue stars, and this is noting us that the first wave has occurred, and we'll note here that it's hit the AAA support price 21.72, which is shown here, and we have no orange time or price team signal yet. The Brahma is indicating the possibility of a reverse first to test the upside of the market. The market rallied from the signal to the first orange time team bar, the HOD signal, which is a higher day sell reverse signal. The high of rectangle 1 is the MN code line, and the HOD signal is within a point or two of this HOD signal. Consequently, a time momentum signal is tied to the classic down indicator, and a price is tied to the classic down indicator at MN. The key choice on how to trade this structure is placing an MIT sell order at the MN price using the MN line as a defensible position. or to wait for a close below the tan lines, high and low of the orange bar in the scaffold, also below rectangle 1. The market sell-off coalesces when time momentum fits the classic down structure and logic. The fact we have the orange HRD signal lining up when a few bars away, we project a Dimmock classic down time momentum indicator will kick in, adds to the comfort of the sell at the HOD signal at the MN code line. Time and price have coalesced. From the HOD sell signal, the market reversed down about 34 points, bouncing off the Dimmock structure input of yesterday's low. The instant software feedback continues to monitor the market through the day. The next PM orange time team signal opened below the R1 low, projecting a sell opportunity at the R1 low price. The R1 low, as we know, is a defensible line, and the market fell about 35 points when the market retested scaffold low, R1 low, at the orange time team signal. A sell continuation followed when the next gray bar was below the DYC line. The early HOD signal in the AM session up here was the last high of the day. Dimmock adds to the VWAP intelligence by adding a new confirmation level. In the same chart, you see Dimmock ignoring the breakup of the VWAP line, projecting the sell-off that was soon to engulf the market. Finally, let's look at two very key rally signals on two different days. This NQ chart shows a new value area intraday definition. The panel Dimmock call is classic up. We have seen that rectangle 1 is a key indicator in each intraday market, the great majority of days. Rectangle 1 becomes the high or low of the evening call for the next day's value area. Based on this, we can conclude that today's rectangle 1 will become part of the next day's value area. So we have a new type of value area over 2 consecutive days. The prior day R1 high, the Y is shown here. And then we see the current high of today's rectangle 1. A break above 2 consecutive R rectangle number 1 highs is a new value area indicator. And we saw how this coalesced with further confirmation of classic up. Finally, let's look at a chart with a major rally signal. In the panel highlighted in green is classic up, and the ranges highlighted in green is 100% above yesterday's high. This signals the whole of R1 is above the prior day high. This projection with the green highlights in the panel carries weight, and it is shown on the panel at 10:30 a.m. Eastern time. Regardless, we always check the time teams to be sure we're in balance. Time momentum in classic up projects a buy order after the first 25 minutes, placed above R1 high with this preferred upside signal. Once the market was above R1 high after a re-challenge of R1 high, and after 10:15, the classic up time momentum is projecting the market will reach the first high of the rally again at about 11 to 11:05. And we see that happen. The second leg uses the first orange time team bar, tan high and low, plus classic up time momentum to confirm the start of leg 2 in the rally. Note the ES was never below the tan high. Time momentum projections for the logic and structure of a classic up day projects a time momentum rally about noon. The classic up day continued to rally from the first AM orange time team to the next PM orange time team. Here was the first orange time team. Here's the second orange time team. Here was the classic up noon rally, which is a time momentum buy based on a classic up signal with 100% above yesterday's high, but in particular with the effect that we're above tan high as good support. Contextually, we still prefer to be on the buy side, and even at this point, we'll wait for the next time team signal, the next gray bar, to confirm the next market movement. A rally signal follows when the gray bar opens and closes above the magenta line. The next bar opens above the gray bar, and this is a rally continuation. The magenta line being the defensive line, keeping a tight stop just below the magenta line. Dimmock found the last low of the day at about 10:45, and the market rallied about 20 ES points from there. In summary, Dimmock was especially developed as a one-stop software for the financial index futures markets, allowing you to be on a more level playing field with corporate computers, producing a laser intraday focus on the ES, NQ, and RTY. It's very important to get on a more level playing field with corporate computers. We recognize the structure and scaffold of each new day, and next, the unique software analyzes the logic of the structure and scaffold. Proprietary time teams make ongoing checks and balances through the day. One key is accuracy and speed. Many calculations are made prior to the final analysis and instant intelligence feedback. With that many calculations, it's important to be accurate. Express manuals provide you with the details of how this all comes together, and we are here with ongoing support. Beginners, intermediate, and advanced traders are all very welcome. Please use the code NTW for a 30% discount on any membership fee. Thank you, Thomas.
All right. Well, I would like to give a special thank you to Alan Fitterman of DMIC 2059 for a great presentation today. Everyone in attendance here will receive an on-demand recording of today's event, so please keep an eye out for that email. Now, NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in the events, we hope you will attend them on a regular basis. We would like to remind you again that the information today provided of that was that of DMIC 2059 and not that of NinjaTrader. All information here was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at the NinjaTrader Ecosystem.